That day, the NASDAQ market in New York opened as calmly as ever. With no particular volatility, investors observed the market in its usual rhythm. But breaking through that calm, one stock began attracting unusual attention. The focus was on the American tech company, Datadog. Datadog is a company that provides an integrated platform for observing and analyzing the cloud-based operating environments of enterprises. In the industry, this is referred to as an observability platform. However, the structure that Datadog has built goes beyond mere observation. The company aims to create a fully closed-loop platform where observation leads to action, and action leads to experimentation. This structure began with the release of a feature called Bits AI in August 2023. Powered by generative AI, this function is vastly different from traditional static alert systems. It responds to operator queries in real time, tracks the root causes of problems, and recommends necessary actions. Then in June 2024, the company officially launched App Builder, which allows users to create automated workflows without writing code, and simultaneously introduced On-Call, a feature that activates response protocols when incidents occur. In May 2025, Datadog completed its loop by acquiring Eppo, a platform offering product experimentation and feature flagging capabilities. With this acquisition, Datadog's platform now enables users to observe data, respond to incidents, and test and iterate product decisions, all within one integrated environment. Launching multiple key features and acquiring a company in such a short span is highly unusual by industry standards. Most tech companies typically integrate major capabilities over months or even years. Datadog, however, managed to absorb all core functions within less than 24 months. This kind of speed reveals not only the company's technical prowess, but also its strategic ambition to lead the intelligent operations space through a comprehensive platform approach. These advancements are reflected in their financial performance. First quarter results for 2025 were announced before the market opened and showed revenue of approximately $760 million, a 25% increase from the previous year. The number of customers spending over $1 million annually rose to around 3,700, and the annual revenue guidance was raised. Second quarter earnings were also released pre-market and recorded approximately $830 million in revenue, with earnings per share of about 45 cents, again surpassing market expectations. Then on July 9th, 2025, Datadog was officially added to the S&P 500 index. This was not only a symbolic achievement, but a technical one. Inclusion in the S&P 500 means the company has met stringent criteria for market capitalization, liquidity, financial transparency, and earnings stability. Datadog had entered the institutional core of the market, but from that moment, subtle signs of unease began to surface. On the surface, everything seemed perfect, yet investors started raising critical questions. And that key question was, is this growth truly sustainable? The first mystery centered on the company's revenue model. Datadog uses a usage-based billing system. In other words, the more customers use the platform, the higher the revenue, and the less they use it, the more revenue drops. While this model offers flexibility and alignment with customer value, it also carries a structural risk. If a few large customers reduce usage or switch to internal infrastructure, revenue could face immediate downside pressure. This became more than hypothetical when speculation arose that OpenAI, one of the most watched players in generative AI, might reduce its usage of Datadog and replace it with internal tools. In response, some analysts downgraded Datadog's growth prospects. In typical cases, such concerns are clarified with specific numbers or official statements. However, Datadog has remained silent, and that silence for investors can be the most unsettling signal of all. The second mystery lies in the monetization speed of the new features. App Builder, On-Call, and Eppo are essential elements of Datadog's evolution from an observability platform to an action-oriented system. But to date, Datadog has not disclosed how much these features contribute to revenue. Normally, tech firms publicly share adoption rates and monetization figures at a certain point after product launch to build investor trust. Datadog's silence here is uncharacteristic and opens space for speculation. Is it a strategic decision, or are the contributions still negligible? The lack of clarity itself forms a new layer of mystery. The third mystery concerns Datadog's public sector expansion. The company already holds FedRAMP moderate certification and is currently in process for the highest level, FedRAMP High. Gaining this certification would allow Datadog to work with high-security U.S. government agencies like the Department of Defense and the FBI. Typically, companies pursuing this path update investors regularly on progress and revenue potential. Datadog has yet to provide a timeline or even comment on potential public sector wins. Whether this is a strategic non-disclosure or the result of internal delays remains unclear. Despite these mysteries, one fact is certain. In December 2024, Datadog issued a 0% convertible bond and raised approximately $870 million in capital. These funds are expected to support R&D and customer acquisition, and the near-zero interest rate reflects a savvy capital strategy. What we are observing is more than just a tech company. This is a platform entity redefining how it communicates with the market and builds trust, while choosing what questions to answer and which ones to leave unanswered. On the surface, everything looks perfect. The performance is solid, the market perception is favorable, and the platform capabilities are robust. But investors know the most important information may still be hidden. So the question boils down to this: can this closed-loop platform truly evolve into a sustainable and repeatable revenue engine? And the answer to that question may only be known by the company that's watching more data in real time than anyone else, Datadog. To all viewers, the Value Stir channel welcomes your suggestions for stocks and crypto assets, whether they are listed, unlisted, or soon to be listed. If you have a ticker or asset you've been curious about, please leave a comment. Your tip might become the next story we investigate. This was Value Stir.